This program is brought to you by Real Estimate, Australia's #1 property value estimate. Get your real estimate today on realestate.com.au.
Thanks for being with us here on Business Now. Let's go around the country and see how the auction markets fared over the weekend. And broadly, look, there was a bit more stock on the market after that Easter break. REA Group tells us there were 1,531 auctions around the country over the past week, and just over 60% of those were sold. In Sydney, 651 auctions. That's down a little on pre-Easter. The clearance rate here was under 60%. That's almost a key marker, I think. Melbourne had 503 auctions, but you can see the auctions clearance rate is better, above 65%. In Brisbane, just 43 auctions, and of those, 24 were sold, again below 60%. In Adelaide, though, have a look at this, 421 auctions, 42 auctions, I should say, and almost 80% of these were sold, 78.6%. In the ACT, 41 auctions, the clearance rate there, 61%. And in WA, just a couple of auctions, but REA Group says 589 private sales during the week. Well, Anne Flaherty is an economist with REA Group and joins me now. Anne, many thanks for your time. Just going around the states, it bears in mind that we always talk about migration being one of the big drivers of property prices, but it's also intrastate migration, not just people coming in from overseas, that also drive these property markets.
That's exactly right, and we definitely saw that was the case during the pandemic years, where Queensland's population increased very significantly, while populations in Victoria in particular and also New South Wales shrunk. So we are still seeing that trend of interstate migration, but primarily it's international migration that's really driving up our population at the moment.
And the reality is that when international migrants come to Australia, they generally gravitate to Melbourne, Sydney and Brisbane in particular, Perth to a certain extent also. But the fact of the matter is that's where the pressure goes on infrastructure, that's where the pressure especially goes onto the housing values.
That's right. And we know that when people first come to Australia, they're far more likely to be renters. So in the first 5 years, more than half of all new migrants do rent. And so that's where we've seen really significant increases in pressure in the rental markets.
The other thing also is that many of those people will end up in apartments if they can't get themselves into a freestanding house. Now, I know that for a long period of time in this property cycle, that the performance of apartments has not been as good as those of freestanding homes. But in recent times, I've just been reading some stuff saying anecdotally there's evidence now they're starting to play a bit of catch up.
Well, that is absolutely the case. We're especially seeing this in Melbourne, where it was actually apartments that saw the strongest price growth. They saw stronger growth than houses. And I think this comes down to affordability. People are also looking for a home that they can afford to live in, and houses are out of reach for more and more first home buyers. But we're seeing this sort of more generally as well in the other states. That first home buyer cohort, more and more increasingly, are being priced out of purchasing a house. And so that's increasing that demand for units.
There's a second aspect of this also, and that is that banks quite clearly have got to make their own assessment, not just about a person's ability to pay, but also the state of those housing markets, be it the apartments markets or the freestanding home market. For a period of time, it seems as though banks themselves almost preferred to be lending against freestanding homes as compared with lending against apartment blocks and units.
Yeah, well, houses were perceived as being lower risk. But in the current market, what we're seeing is that a lot of new apartment projects have actually stalled, and a lot of them haven't got off the ground recently. So projects that do have approval purely because of building costs and whatnot. So what we're seeing is that the speed at which new apartments are being delivered has slowed down significantly, which might be another factor that supports the performance of this sector.
And the complete loop to this is that because rental returns, because of the lack of housing, have started to rise, that makes those apartments more attractive to investors, which therefore makes them more attractive to banks to lend to.
Yes, and I think that the increases that we've seen in rents, banks absolutely factor that into account. The fact that vacancy rates are sitting at close to record lows around the country mean that we are going to see rents continue to rise, which means rental yields will continue to rise. So they're lower risk with the lower vacancy and the yields are increasing.
I'll tell you what, always good to have you in the program. Anne Flaherty, many thanks for your time today.
Thanks for having me.